Hey learners, this is Assistant Professor Kailesh Jaitwar. Welcome you all in this lecture. And this lecture is for BCCA 7 students for Financial Accounting subject. We are in the middle of Unit 1, where in previous lectures we have seen what was the double entry system, what was the classification of accounts, and in today's lecture, we will going to discuss overview of accounting cycle. What is the accounting cycle? This all will be discussed in today's lecture, and adding to this, we will going to see a very important topic for accounting students, that is golden rules of accounts. Let us start with overview of accounting cycle. First, see what is accounting cycle. Accounting cycle helps to identify, analyze and record the financial statements in proper manner. It contains a proper process to analyze, record and summarize all the financial transactions. Let us have a view on blackboard. Accounting cycle, this words has been chosen out from a definition to please concentrate on first point. Accounting cycle is connective process. Connective process means this process requires lots of actions, various activities which will accountants will conduct in particular year. This is collective process of identifying, analyzing and recording the accounting events in particular period. All monetary transaction recorded in financial accounts that we know, but that should be in proper process. Otherwise, our financial statements will not be will not be in proper format. There will be lots of ruckus when we will going to going to access the financial data, right? This is generally made for particular year. In India, we follow financial year for 1st April to 31st March. Third, it ensure accuracy and conformity. That means it includes lots of process where whole information is properly managed and can be seen as a proper process to filterize the financial event and put a filter and put a process, a proper rules and regulated process by which one can handle financial transaction and its records properly. So let us have the process of accounting cycle. Let's see how it works. Starting with the transaction, it starts with transaction when there is a particular transaction. Let's say we have purchased goods from Ram on credit worth rupees 500. That means this is a particular transaction for business. That means this one is a financial event. Hence, financial accountant have to record this transaction in accounting books, subsidiary books, where accountant has to follow some process, where in this process, first process is identifying transaction. Coming to the example, purchase of goods means someone has purchased goods we have purchased goods from someone. Sorry, Ram has purchased goods from us. That means we sold the goods. That means this is our revenue. This is our income. That is how we can identify transaction. Then first we have completed the transaction by its identification. We have identified what the nature of transaction is, and the second process in accounting cycle is to convert this transaction, to convert particular voucher, to convert particular bill in a proper journal entry. Journal entry, this is just basic. We will going to discuss journal entries in very detailed manner, but in the next lecture. Here we are considering very basic topics. Okay, for very basic term, journal entry is the format of debit and credit system where transaction can be recorded at debit and credit format, where a particular transaction can be recorded on the basis of on the rules of debit and credit by considering various types of accounts, by classifying the transaction in various types of account and putting some golden rules on particular transaction. We will convert transaction in particular entry after journalizing. Journal entry means journalizing the transaction. After journalizing the transaction, that means making after making journal entries, we will post that journal entries to particular ledger. That means this process is known as posting. We will transfer particular entry in particular account in particular ledger. This process is known as posting. After posting, we will going to convert that all accounts in trial balance. In our previous example, we have seen that Ram has purchased worth of rupees 500 rupees goods from us. That means there are two accounts. First, sales account, and the other one is Ram account. The Ram account and sales accounts are ledgers. Ledgers that are first we will make entry, and we will make ledger for Ram and sale, and after journalizing we will post that entries in particular ledgers. After transferring journal entries in ledgers, we will transfer all the ledgers in collective manner to a place, and that place is known as trial balance. There will be lots of accounts, right? There will be lots of accounts. In whole year we will going to conduct lots of financial events. Because of this, we will be having bulky amount of transactions. This will result in bulky accounts, and these accounts will be transferred to particular place. Accounts having debit balance will be shifted to the debit side of trial balance, and accounts having credit balance will be posted to the credit side of trial balance. And this whole format will be known as trial balance. That means this will be balanced, and amount will be balanced in particular amount. There will not be mismatch in credit and debit amount. This we will going to discuss with various examples and with proper logic in other lectures as well. Okay. After trial balance, we will make a worksheet. Worksheet means when we have done with trial balance, that means our accounting period will be coming to the end. That means we might be in the month of February or the starting of March, because our accounting period starts with 1st April and ends with 31st March. This exercise will be done almost at the end of the accounting period. We will make a worksheet where we will write, is there any transaction we have left in whole year? Is there any mismatch in account? Is there any suspense account is there? This all accounting analysis will be done by financial accountant, and they will make a worksheet where we'll going to see that there are some financial transaction which has been done after particular time, but business hadn't yet recorded that transaction. Because of this thing, we will going to make worksheet. We will means financial accountant will make worksheet. After this, after making worksheet, we will be having particular transaction, and for that transaction we will make entries. That means there is a adjustment of entries. After providing main entries in this process, we will left some entries in whole accounting year, and that entries will be provided in sixth step, and that step is known as adjustment entries. Adjustment entries will be provided to make financial transaction very updated. After providing adjustment entries to financial, after making adjustment entries, we will finally make financial statement. It consists of manufacturing account, trading account, balance sheet, and P&L appropriation account. These types of account and statement will be made in this step. That means on 7th stage. And after all, we will close all books. Close all books means we will going to close our books. Closing of books means we will we will close our accounts. Okay, now this is all about our first part of this lecture. We have seen accounting cycle and what was the definition and the meaning of accounting cycle, and now we will going to see what are the golden rules of accounting. Okay, let's have golden rules of accounting. Golden rules of accounting is again very sensitive and very important topic for your future if you are making your career in accounting area. As we have discussed in previous lecture, there were three types of account, generally four, but we are considering here three. First, personal account. Personal account. Second one is nominal account. And the last one is real account. You should know all these types of account and its golden principles. Let's have example for personal account. We know what is personal account. Personal accounts means the transaction where person or a group of person or a representative of person is involved. That means there will be person. Okay, person. Two persons. Let's have an example where you purchased apple. You purchased apple from shopkeeper. This one is shopkeeper and this handsome guy is you. Name Ram. Here Ram will give money. Ram will give money and shopkeeper will provide Ram an amount of apple. Now see this transaction as per his view. His view means shopkeeper's view. Put your place in shopkeeper's view. Okay, shopkeeper is getting money and giving apple, where shopkeeper is we are considering shopkeeper's view. Okay, because we provide journal entries in business books, not in personal books. Okay, so here this Ram is receiver or giver? Please answer. Ram is receiver or giver? Ram is here receiver. Why? Ram is receiving apple and Ram is providing money. That means we will see business aspect here. What we are providing? Apple, where Ram will receive goods. Okay, that is how Ram become receiver. And if we invert this transaction, then Ram will become giver. If we are purchasing from someone, so that person will become giver. A person, I am giving definition for receiver. Receiver is a person who receives something, and giver in the same way who give something, right? Very simple. So in personal account we will be having two person. One will be receiver and the other will be giver. One is person will be receiver and second person will be giver, right? We are studying golden rules of accounting. Mark words, golden rules of accounting. That means because of these rules you will going to make all the journal entries, all the financial statements. Hence it become very necessary to study this. So in personal account we have two aspects, receiver, giver. Generally we are studying this concept to get to whom to credit, to whom to debit. In personal account we have two person, only two person, one receiver, the other one is giver. We will debit the receiver and vice versa, credit the giver, right? Receiver debit, giver credit. You should understand and learn this. What personal account has two aspects, receiver and giver, where debit the receiver, credit the giver, right? Debit the receiver, credit the giver. Okay, this is all about personal account. Let us have example for nominal account. Nominal account also has two branches. Business is generally conduct to maximize profit, means getting more and more income and gains from business. But for that income and gains one has to incur expense. Then that means there are again two aspects. In nominal account we have expenses and losses and income and gains, right? Please give your focus here. Expenses and losses will be debited. Expense and losses will be debited and income and gains will be again credited. Very simple, no space signs here any. Okay, expense and losses will be debited, income and gains will be credited. Let's have a quick revision. Personal account, receiver, debit, giver, credit. Nominal account, expense and losses, debit, income and gains, credit. Coming to the real account. Real account, as unlike these two, these accounts has two aspects, receiver, giver, expenses and losses and income and gains. But in real account there will be only one aspect, and that is asset. Asset means a thing which you own to generate income and not to sell that particular thing. And if take example of that Apple shopkeeper. Apple is for sales. That means Apple will not be fixed asset or any type of asset for that shopkeeper. But the weighing machine, the thela and the other things which he is carrying to generate income, that all things are fixed asset, current asset and all. That means that all are assets and not a good, as like Apple. Here we have asset, right? So asset, let's have example again. You purchase goods. Again take that example. You purchased Apple and provided cash to that shopkeepers. provided shop to the provided cash to that shopkeeper. That means cash was asset for you, right? That one is sampatti for you, na? That again, that one is asset for you. You have given asset. Let this was personal view. Let's come to the business view. In business, this is business ABC Limited, where asset can be taken or can be given. Okay, if in this case asset is coming in, right? Asset when in asset we will be having two aspects for debit and credit. First, debit what comes in. We will debit real account when asset is coming. First, debit what comes in. Debit what comes in. If something is coming to the business as asset, you should debit that asset, right? Strict rules. You should debit things, you should debit assets when it is coming, and vice versa. Vice versa means credit what goes out. When we are debiting for asset, when asset is coming, then we should credit when asset is going, right? This is all about all three accounts. Let us have a quick recap. Personal account, debit the receiver, credit the giver. Personal account, debit the receiver, credit the giver. Nominal account, debit on expenses and losses, credit on incomes and gains. Real account, debit what comes in, credit what goes out. Okay, please have a please give it very conscious look, very important look to this lecture, because if you will not going to consider this as important, if you are not studying it this lecture, if you are not watching this, you will lose a major concept in accounting syllabus. Okay, after this we have the fourth branch of accounting. Let us have fourth branch as per modern aspects of accounting. This is modern aspect. This account has arisen from modern concepts. The fourth account, valuation account. Valuation account says when the account to be decreased. Debit when account is decreased, and credit when account is increased. Again, two things: debit when decreased, credit when increased. Credit in case of increase, debit in case of decrease. This is all about our golden rules of accounting. Okay, this is enough for today's lecture. We will going to see how to make journal entries in next lecture, and this will take too much of time for us, because this is too much important and we have to consider it as important topic, and we have to study it in detail. So please watch full video to understand all these things, all this stuff, and till then, thank you.